Hi, this is Julian from Market Update Premium. We trade growth stocks and momentum stocks. And today I want to go into a mindset topic with you, and I want to talk about the trader's journey from basics to mastery. So, how do the first 10 years look like a stock trader? And of course, it's different for everybody, but over the years, I made the experience with working with a lot of traders that all the journeys look very much the same. So let's look at the trader journey for the first 1 to 3 years. I think it's very important to lay the foundation in the first 1 or 3 years and have also very realistic expectations about these years. So one of the things that I recommend to traders that start new in the business of trading and stock trading is to trade only with a very small capital. It does not make sense to jump into the trading world with a big account if you are not consistently profitable for a couple of years. So just to give you one example, if you want to start with a 100K account, I would recommend to use only 10K of that to start out as a trader, because you have to expect to lose a big portion of that capital in the first couple of years. I mean, you have to learn a total new job, and you need time for that, and you also need to make mistakes and learn from that. So start small. That is very, very important. That minimizes risk and also takes pressure from you so that you are able to learn. Then take the time to understand basics. You need to gain knowledge. You need to gain knowledge in technical analysis so that you are able to interpret charts. You need to get to know a lot of different indicators. You have to get familiar with fundamentals and also with story analysis. So what is behind the stock and what drives the stock? And maybe you say now to yourself, yeah, but I'm probably more a technical trader. Why should I learn something about fundamentals or story analysis? Maybe you are a technical trader, maybe not. So you have to try out a lot of different things to find out what type of trader you are. And if you, over the years, come to the conclusion that fundamentals will not help you in your trading, or doing research about the story will not help you in your trading, then it's okay to leave it aside and focus on a different area. But I would definitely recommend to get familiar with a lot of different approaches and methodologies before you sort out some of them. Gain hands-on experience with trading. That's very important. So this is, it's all about making mistakes and, placing some trades to find out how you react to trades, but also what works and what works not. So exploring various different approaches and vehicles is important. So what do I mean by various approaches? There are a lot of different approaches, like cancelim, like pullback trading, like mean revision trading, etc. You should try out a lot of those to find out what you are compatible with and what not. So what resonates with you as a person. And that is, I think, one of the most challenges and one of the most important things in the first 1 to 3 years, to get to know more about yourself and then also see what works in the trading world for you and what not. And the same is true for vehicles. Maybe you are not a stock trader. Maybe you are more an ETF trader, or you are a futures trader or something like that. Then it's okay to find out what works with you or what works for you, and which vehicle is the best one for your own trading. I personally, I tried out many different strategies at the beginning of my trading career, from super technical trading, so 100% systematic trading. Then I tried out pure technical trading, a little bit more in the direction of fundamentals. I tried out a lot of different vehicles to find out what works for me and what not. And over the years, of course, I fine-tuned that. But it takes time, right? So you cannot expect that in the first 1 to 3 years you will learn to become a successful trader. I mean, go through the different stories of traders, and you will find out that the most of them need many years to become successful in the stock market. It's not a race, it's a marathon. And when you compare that also with other jobs, you need probably 10 years to learn another job and master it. Why should it be different in trading? And that's also exactly what I mean by set realistic expectations about market and also the growth. If you start out in a bull market and you will get 1 year later in a very choppy market period or a bear market, you have to relearn how to trade in such a market environment because it's totally different and you have never been in such a market cycle before. So that means also you have to go through several different market cycles to learn how to react in such a market cycle and how to overcome such a market cycle without being bankrupt. And that takes a lot of time. And the same is true about, setting realistic expectations. Maybe you made 1 or 2 lucky shots in a bull market, but that's not enough. To be consistent profitable over many, many years, you need an approach which is based on rules and where you can produce repeatable trades and repeatable setups. You cannot build your future on pure luck. That is very important. Luck is not repeatable. And setting realistic expectations about the market is also important, and also about your own trading. I mean, you cannot expect to double your money very quickly if you have no knowledge about the market, or on the other side, if you have not enough experience and a ready to go trading approach. So, set realistic expectations. The best thing to set realistic expectations is to expect to lose, especially in the first years. And after you mastered a couple of first years, then you can expect to go to a break-even trader, and then more and more you become profitable. So, and I personally, I know that 95% of the traders do not survive the first 1 to 3 years because of 2 reasons. The first one is they have totally wrong expectations about the market and they gave up, totally frustrated. Or on the other side, they lose all the capital and are not able to trade anymore. So my recommendation for the first 1 to 3 years is really to learn everything what you can learn. Buy a lot of great books about trading, about technical analysis. Study some very successful traders in books like Market Wizards, for example, but there are many different books out there too. Buy some good video courses to learn more about trading and also learn from experienced traders. I personally learned so much in the first 3 years, probably a little bit more in my own trading career from other traders and from courses or from material available at the time. So that was one of the best sources, especially observing other traders, how they trade. That was, a golden thing for me. Then after you survive the first years, typically in the first 3 to 7 years, you build on an approach or 1 or 2 approaches and refine that. So maybe after a couple of years, you identified 1 or 2 trading strategies or approaches that fits to your personality. And maybe you are a little bit unsure, okay, what type of trader do I want to be in the future? What really works for me? And then you start to fine tune that. So fine tuning means on one side, improving the profitability of the trading strategy. On the other side, fine tune that so that it fits more to your own personality. And that's really important. One of the alerts I always notice when I work with other traders is that they tell me, okay, I was not able to stick to a certain rule of my trading approach. And very often it's not the rule that is wrong. It's much more that the rule does not fit to the personality of the trader. And then you can either change the rule and make it compatible with the trader, or on the other side, change the trader, but that is usually something which takes a lot of time and it's much more challenging than changing the rule or fine-tuning the rule. So, in the first, I would say 7 years, you identified 1 or 2 good trading strategies, and then you can really dig deeper into them and fine-tune them. Then you also develop usually a deeper understanding of the market and your own personality. Why is that the case? I mean, in 7 years, you probably come along different market cycles, like a bull market, like a bear market, like a very choppy trading period, so like a sideways market, etc. And you get to know the different types of markets and you got familiar with them. You overcame them and you build on your success of overcoming them. So you develop a deeper understanding. On the other side, you probably have analyzed thousands of charts, thousands of stocks during the first 7 years. So you develop a deeper understanding and also a little bit of intuition based on your experience. And the same is true with your personality. When you overcame a lot of different markets and a lot of different market cycles, you learned how you react to success and also to failure and how you act in different market environments. And that is very important because you learn more and more and more about your own personality. I can say from my own experience that trading was one of the best things to get to know me and also to learn more about myself. So it's really a learning journey, not only about trading, but also about your own personality. In these years, you need to adopt the mindset to embrace mistakes and failures and learn from them. You know, write down the things that you learn from your mistakes. Do deep analysis about trades and your own trading. Maybe you have a trading diary. Maybe you make it a habit to go through your trading journal every day or every week and write down, what works and what worked not. And this part or this learning process itself, this is really a source of golden nuggets for your trading and to improve your trading. That's very important. In the first couple of years, I made it a habit to really analyze my own trading and trading diary every day, every week, and every month. And every time, I wrote my conclusions, my notes down, and I got more and more familiar with my own personality and also what worked in my trading approach and what not. So I already said that. So adapt to different market cycles. You learned how to manage that, when to stay in cash, when to be more aggressive, when to be more defensive, how to go short in a market that or in a bear market, what to do in a sideways market. That's very, very important. So, and during this time, you want to also intensify the work with other traders. So you should look for very experienced traders who offer mentorship and also coaching. And one of the things that I found out for myself is it's not the most important thing to work with the most successful trader in the world. It's much more important that the trader who you work with is able to teach. Of course, the trader must be successful, but on the other side, he must able to teach. It's the same thing like in the sports business. Usually the coach, the trainer, is not the best player on the field, and but the trainer or the coach is able to mentor and coach other people. This is very, very important. And if you have the best trader in the world but he's not able to teach or coach or mentor other people, then you have a problem because you cannot learn from them. So learning from very experienced traders is important through mentorship or coaching, and it will help you a lot, especially when you start to review your trades with an experienced trader. These are, new, fresh eyes looking at your trades, giving you honest feedback and brutal feedback, what to improve or what to not improve. And you can use this information to accelerate your trading. Very often, it takes only 1 or 2 changes in your trading approach in the first 7 years to really make you successful and to break through a wall of maybe going sideways in your equity curve or not. So working with other traders is very, very important. You cannot learn everything out of books. You have to make a lot of mistakes and you have to analyze them and learn from other traders. So, and then, when you have survived the first 7 to 10 years, you usually have a lot of passion for the stock market because otherwise you would give up frustrated. So, but if you survive the first 7 years, I would say you have a deep passion for the stock market. You are probably already successful, and it's only about mastering and scaling your trading approach. So you already commit to a refined trading approach, and you are really focused on being consistent in trading. So you found your own strategy, and it really doesn't matter if it's CanSlim, if it's another trading approach, if it's 100% systematic, whatever. There are so many different types of traders out there, and there is an approach for you or for every type of trader available. And you have to make it your own. That is very important. Do not underestimate, do not underestimate that, having confidence in your own trading decisions, and when ideas came from you, how easy it is to execute that. Do not make yourself dependent on other traders. You have to have a trading system, a full trading system that came from you, which is suited to your personality and where you have a lot of trust in. And this is also what I try to teach my members, and also what I do with my video course. I really want to make them independent traders, because it's so much easier for them to execute the trades, and also to build on success, if everything comes from you. You trust yourself much more than other people. So have a refined trading approach is important, and really focus on consistency. You already navigated multiple market cycles during the time, and you know that you are successful. So you have changed your personality, you have changed your mindset. You know that you are a successful trader, and that you can overcome any different market cycle which will happen in the future. You are really trusting yourself. And this is what makes a difference between a lot of different traders. The most successful traders, they know that they can survive every market cycle. They know that they are successful in the end. And that takes many, many, many years to develop that type of mindset. And you achieved consistent profitability. So when you look back in your trading record, in your equity curve, you can see that you are able to make money almost every year. So, and then it's only about scaling your trading profits. So a lot of traders always ask me the same question, how can I make more profits? And the first thing what I ask them is, okay, are you profitable? So, and then I very often get the answer, yes, I'm profitable, or I was profitable last year, or my equity curve is more or less going sideways, etc. And then they often also have the idea where they say, yeah, I have to be more aggressive in trading, or I have to take more aggressive stocks or whatever. And then I say, no, if you want to have more profits, it's just a question of scaling. That's it. You can make a lot of money even with more conservative stocks by using more capital or more margin at the end. When you have a profitable trading approach which produces consistent profits over time, you usually have statistics available, like your hit rate, your average profit, and your average loss. And then you can calculate how you must scale it to make more profits. And either you can use more capital, so you can use a lot of capital in your trading account to scale the profits, or on the other side, you can use more margin, because you can calculate the downside risk of your trading strategy, or you can use a higher trading frequency if that is available for your trading strategy, and also make more money. So, scaling the outcome is very easy. I come from a background of product management. And when your product is not successful or not used from other people, it makes no sense to scale that. You need a working product before you can scale that. And it's the same thing with trading. If you have no trading approach that is working, don't scale that. And this is one of the reasons why I also say start small in your trading career, and then over time you can put more money into your trading account. And when you are really a master, when you master your trading and you found a trading approach what works for a couple of years, then you can really scale the profits. So in in the last, or not in the last years, but when you are very experienced, 7 to 10 years, it's all about fine tuning. It's all about fine tuning. You learn more advanced skills about, okay, how can I improve my entry timing a little bit better to reduce probably the average loss and increase the risk reward ratio? How can I fine tune exit strategies so that I, become more an intuitive trader also when it comes to exits? Don't underestimate intuition. It's really an important source also to be a successful trader. I know that a lot of traders and a lot of people are thinking you have to act like a robot. But on the other side, when you have 10, 20, 30 years of experience in the market, you gain so much experience, you saw so many things that these things are very, very deep in your brain. It's probably a habit, it's recognizing patterns that are not conscious to you anymore. And this is intuition. And this is something you can use. Of course, you have to double check that, but it helps you a lot to become a master because you very often recognize turnaround points or potential sell points before the trigger already happens. You see something in the chart that is not right, and you trust yourself so much that you can act on that. And this is intuitive trading. This is very important over the years. So, and then of course you learn also how to manage positions better, when to become more aggressive, when to become more defensive. Scaling your position size much faster if you see that a trade is successful or not. These are all skills you can fine tune and really master. And of course, the emotional side is something to master too. Over the years, you will stumble upon new challenges when it comes to your personality or when it comes to emotions. And you can, of course, master that. But after 10 years, you already changed so much in your mindset and so much also in your, or how you handle emotions, that there is not so much improvement anymore. So, and how to work after, 7 to 10 years, you know, I would look for a very close relationship with a mentor or coach to reach new highs. So somebody who can give you very honest feedback, which helps you a little bit more on this advanced skill side. And these are usually very experienced traders you work with. And don't make the mistake to only look for mentors and coaches which are very similar to you. I would do exactly the opposite. I would also try to learn from people who trade differently and also who trade a little bit counterintuitive to my own trading, because you can learn something from them which you maybe can apply over the years. And to be fully honest, in this trading journey, from the first years to the last years, you will change your trading approach. And probably you will be a little bit more conservative in the last years than in the first years, because you went also through some frustrations when it comes to, failed trades or losses. And that's totally fine. Give yourself the time. And also over the years, accept that your trading will change, your trading approach will change, your mindset will change, because also probably your circumstances in your private life will change a little bit. And again, 95% of the traders, they give up in the first years. When I see that people survived the first 3 years and go into their fifth year, 6 years, there is a high probability that they will continue and that they will become more and more successful. And then when you have survived, 7 or 10 years, you become really a more and more and more a master. And of course, for some traders, it just takes a couple of years. For some, it takes more than 10 years, and that's totally fine. Give yourself the time. Trading is not a sprint, it's a marathon, and you will learn a lot about yourself, and over the years, you will become more and more and more successful. All right. So if you want to follow more here on YouTube, you can, of course, do that. But if you are interested also to deepen your knowledge, I offer my Growth Traders Toolbox video course. It's a 5-star video course where you can learn a lot about growth trading. and risk management, position sizing, etc. And you can also try out my community market update premium, where you find a lot of passionate growth stock traders, and you can try that 14 days for free. Or if you like, you can start my free video course. Everything is in the comments below.